Hey everyone, Andy Moss here for TradingAdventures.com, and it's Thursday afternoon, about just after the 4 p.m. close, and the market is closed tomorrow, which means the week is over, and that means we may as well go ahead and take a look at the weekly charts. I'm going to send them out a little early this week. Got some travel coming up, so I want to go ahead and knock this out and hit the info while it's fresh here. Let me make myself a little smaller so we can see more of the chart. And here is SPY to start out with as usual. We're still above a 4-week moving average here. And here's the 10-week coming up just underneath that. So while I'm on that note, quick housekeeping. You might notice the moving averages on my charts are a little different now. If you're used to seeing the yellow and blue lines, now we've got a red dashed line, a blue dashed line, and a black dashed line. That's the 4-week or roughly 1 month of action there. The 10-week, which is roughly equivalent to the 50-day moving average, and the 40-week, of course, roughly equivalent to the 200-day moving average. And that just keeps things consistent across my charts. I've switched my daily charts as well to we've got the 5-day moving average over here. The 10-day is in a gray dotted line here, and then a 20 and a 50. Just to keep things a little simpler, a little more consistent with how we look at things on alpha trends. So that just keeps the charts in line. So anyway, decent pop here on the SPY after last week's dip down below the 10-week moving average. We're recovering pretty nicely. This is still a market in a healthy consolidation after a tremendous move there. And notice we didn't even really get very close to the anchored VWAP from this low back on March the 30th. So still in an uptrend, still holding up just fine and progressing, while RSI is not even overbought there. So Q's a little bit stronger here. We dipped down below the 4-week and back up to a new weekly closing high, and still closing in on this Fibonacci extension level, which is up around $764. Very strong uptrend. A little bit of a blip here over the last couple of weeks, as we've already covered, but this rebound has been very nice in the NASDAQ 100 this week, and the DIA, the Dow 30, even though it closed well off the highs for the week, that's still a new weekly closing high for the Dow. So last of the major 4 indices here, IWM, another weekly closing high, and more like the SPYs and Qs, it dipped a bit and recovered pretty nicely. So the Dow, which was kind of a bit of relative strength here over the last couple of weeks, while other things dipped, it's taken a little bit of a break here towards the latter part of this week. Bitcoin, still in trouble. It still looks nasty. This is a bearish consolidation pattern down here below or in the bottom end of the range of this big red weekly candle from a couple of weeks ago. I mentioned in the quick look at the weekly charts that I've shared early this week, this was a hammer candle that was looking for some confirmation, and it started out good. It looked like we might have a chance at a bounce, and of course that has reversed course now. Still holding above this 60,000 mark. Round numbers there have an impact for whatever psychological reasons, but that's where we are, and moving averages all falling there from up above. So bearish configuration there on Bitcoin. Still nothing has changed in that world. The dollar, however, is gathering some strength here, and for the first time in a while, it's actually touched the upper boundary of this shaded area. Not that this is incredibly precise. This is more of a range, but just an interesting note there. It did kind of touch that precisely before backing off a little bit, but it's back above this VWAP from the highs back in, this was January of last year. It's above the moving averages. They're all rising, and so the dollar is trying to shore itself up a bit there, while volatility is continuing to fall, which is no surprise. The market's been smoothed out fairly well this week relative to the last couple, and so volatility back down in the 1640 range there. Looking across the world, this is the all-cap world ex-US index, and the rest of the world's doing just fine as well. New closing highs above all the moving averages, so on and so forth. FXI is one of those countries, though, not holding its own. This is a pretty drastic breakdown. We've been watching the test of this level for 3 weeks now, And this week we lost that soundly. It's well below that, down below all the moving averages. So China still sorting some things out there. And let's see here, just out of curiosity, let's put the anchor from not that candle, this candle. Well, I can get my chart to hold still. Either way, it doesn't have to be precise. This is the one I'm shooting for. And so maybe an area of note down here in the 32.66 range in coming weeks. We'll see if they can find some support there. We won't know until after it happens, of course. But if you're short China or you're looking for a spot for it to maybe find some firm footing, 32, mid 32s is an area I will be looking at. Bonds were discussed a lot this week, especially yesterday after the new Fed chairman, Mr. Warsh, gave his comments, and the bonds were wiggling around there a little bit. But is it just noise? It sure looks like it here on the weekly chart of the AGG, at least. And to be fair, the short-term treasuries are what was getting most of the commentary yesterday. But still in a kind of a choppy zone here, but back above the moving averages. So that's a close above the declining 40-week and the rising, or excuse me, the declining 10-week and the rising 4-week here on bonds. So no directional resolution there, but at least they didn't break down further. TLT, Treasury bonds, did have a little bit of a pop this week, and now we can look here and see if this area becomes pivotal. It was support over here, it was resistance over here, and now we're back again. So we'll see how price behaves there next week around the $87 range on TLT. And high yield bonds, maybe a little bit of a hope towards a bullish configuration here. We had this pop, it's drifted lower and back up or near the moving averages here, clusters of support and price action around $79 to $80. But we still have some previous highs and the declining 40-week moving average up here just above this level a little bit. So not out of the woods yet there on the high yield section. Commodities as a group looking weak and breaking down, moving averages coming down from overhead, and that is driven largely, of course, as we know, that the GSP is a very oil heavily weighted index. And here's oil as we get the news out of the Middle East that the supplies supposedly will start flowing more easily again. Oil is all the way back down to its rising 40-week moving average. And what was once a very strong move off of this dip is given back more than half of that now. In the meantime, gold still below its rising 40-week and below the declining 4 and 10-week moving averages there. So gold looking susceptible, silver looking pretty weak here below the 40-week moving average. And that's kind of it for the macro market. So we see the stock indices gaining favor while the commodities cool off a little bit and the dollar comes up with stocks. So moving into our relative strength relationship, we've got growth versus value here. A little bit of an inside range, a very small inside range relative to these last 2 weeks. So once again here, that just quickly on their individual charts, the Russell 1000 growth right here between the falling 4-week and the rising 10-week, while value continues to rise there a little bit. So consumer discretionary versus consumer staples, discretionary on its own, bumping up against the trend line once again and finding some resistance there to close slightly below the shorter term moving averages. And staples inside bar, inside candle, but still a wide range here. So no real direction there. Here's how they look versus each other. Slight favor towards discretionary, which again is a somewhat of a potential risk on appetite signal. Here's high beta versus low volatility, with the NASDAQ up strongly and the Dow lagging. That's not a direct correlation there, but that's not a surprise to see more appetite towards the riskier segment of the market there this week on that relationship. So now moving into some of the individual sectors, semiconductors, incredibly strong. Look, these dips just can't be held down. That's a wide range here the last couple of weeks, but the moving averages are so steep. The price action is straight up like a rocket. It's just really tremendous sustained strength there in the semiconductor index. And XBI broke out. We talked about this earlier in the week. This was how we left things last week, and we had a nice breakout above this previous high and it started. Let's look at the daily chart here, and here's Monday, and it's a little bit of a retracement there on Tuesday, and then 2 days of more progress. So that's a really breakout so far on the biotech sector. We've seen a lot of names, individual names, pop up in that area of the market for potential trade ideas and setups. So that's something we want to be paying attention to going forward. If it were to mirror this move before the consolidation, let's just draw it in here real quick. If we go from the low to the high and then copy that over to this low, that could give a potential measured move on XPI up in the 148 area. So this move only took 3 weeks. This one's already 2 weeks in. Can we get a week 3 to take it towards that 148 level next week? We'll have to watch and see how that goes. Software still looks pretty bad, giving up this whole or most of this move over the last few weeks and a very significant portion of the move off the lows. Not completely broken yet. We've got some various anchors here off the highs and the lows. Maybe we get some support in this area, but if it's going to bounce, it really ought to do so from here, or it's going to look pretty nasty and looks like it has a lot of potential back down towards 76 and maybe even further. Mag 7 names inside week between the moving resolution there. Financials is what I really wanted to point out this week, and they started out very nice. Decent rise here early in the week. Let's go to the daily chart again on those. You can see here is Monday, Tuesday, Wednesday, and today is really what gave back most of that move. So a lot of what you see in this upper shadow here on this candle, I'll just take that off of there for a second. You can see that better. A lot of that came today. So financials maybe not holding that breakout as well as we want, but it's not broken yet. So we can see how that progresses next week as well. And of course, energy is going to look very much like the oil futures here, coming down below this anchor off the recent lows and getting back a lot of the gains there, which theoretically frees up buying power to go over towards the tech, semiconductors, the more speculative areas of the market. Individually in the Mag 7 names, Apple trying to hold on here above this recent breakout level and between the moving averages, not broken but not running away. Amazon trying to right the ship here a little bit with a strong bounce off of the lows of the week, but finding resistance here at the declining 4-week moving average. Google not really going anywhere, but making a small attempt at so far as holding this anchored VWAP off of the lows. Meta still looks really bad below all the moving averages and below this recent low from November. No real progress for the bulls there. And Microsoft, much like the software sector, it has given up almost all of this move off the lows to this high there 3 weeks ago. And it really looks like a struggle ahead for Microsoft. At least that's what it appears to be in store right now. NVIDIA, while the semiconductors were very strong, NVIDIA's just kind of stuck here still. It's not going anywhere. It's right around the highs November of last year. And like so many other things, it's not broken, it's not failing, but it's not making a lot of progress, sustained progress higher. And Tesla, a little bit of action here this week with the SpaceX IPO, but again, it's in a choppy range here. We've got the 4-week and 10-week meeting. The 40-week is flat right here above the price, so not a lot to be excited about there for Tesla on this time frame. Moving over to rest and participation, we've got the percentage of S&P 500 stock above a 50 and 200-day moving average just fine. They're just chopping around here slightly above the 50% level. See the percentage above the 200-day moving average clocking in here at right about 57, maybe 58%. So it's healthy. It's not running away. It's not overdone in either direction. No concerns there from that measure of breadth and participation. And if we pull over our 40% charts here, we can see that the is in both status. It may come exit here and then back off a little bit, but not enough to cause a reversal back to a column of O's. So that looks okay for now. And again, that is the percentage of S&P 500 stocks on a point and figure buy signal. and that's how we measure just another way that we measure the number of stocks participating in this upward move. NASDAQ 100 bullish percent back into a column of O's and still turning around here right about the middle of the range. Again, this could be a minimum of 0 and a maximum of 100%. It's kind of an oscillating indicator there, and we're right in the middle. So nothing to be excited about either direction. And then, of course, we also like to look at the NYSE. And again, it's in a column of X's. No buy signal here yet, which means it's still in a bear correction, but it's at 55%. So no real signal there one way or another. I'll show you the roadmap charts here just briefly. Here's the futures, stock index futures of the NASDAQ, the NASDAQ over here, the S&P 500, the Russell 2000, and the Dow. And the Dow is struggling a bit here at the rising 5-day moving average. While the other three they've wrestled with it a bit, but they're holding up above it so far. Here's the index ETF version, SPYs a little below a rising 5-day, NASDAQ a little above, as well as IWM, and here's the Dow below. So the market's just turning. It's just working off this recent move, been incredibly strong for an incredibly long time, and 3 weeks or so here of chop and consolidation is really nothing to be concerned about, especially considering all of the headline risk or perceived headline risk and news stories we've had out of the Middle East and elsewhere. The market is doing just fine with the exception of oil. That is, oil is paying a lot of attention, but stocks continue to go up, and trends in motion continue. Like what we're seeing, we do have a bit of a positive range. We are heading into the summer. We've got a holiday shortened week. There's going to be less volume, more people on vacation, so on and so forth. And so would not be surprised for a couple of different scenarios. One, we continue to grind higher. That's what this market seems to want to do. Or if it wants to chop around and move sideways, that is a high likelihood as well. I would think either of those, and I don't have any statistical data for this, this is just my opinion, but I think either of those scenarios are more likely than a sharp correction back down into, say, this area for the S&P 500, which is, I'm looking at these previous highs and the rise in 40 weeks. If that happens, we could do that and be just fine and still be in an uptrend that would, maybe need a little rebuilding, but certainly not be a disaster bear market. But I do think the higher likelihood here is a grind higher or a few more weeks of top and sideways consolidation before we move up. So we'll continue to watch multiple time frames, continue to anchor the VWAPs to the appropriate places and see where potential support and resistance comes in, and listen to the message of the market. We see this show up day in and day out when we're looking for individual trade setups and ideas. Do we have a lot to choose from? Do they look really good? Are they working out in our favor? Or is the list a little more selective? Are some of the trades not working out as well? And do we shift to a more short-oriented focus? That's not the case so far, but we did see the list get worse and a little less position over the last week and a half or so. The next week will be just another chance to do it all over again. So there's your look at the weekly charts. I hope you all have a great long weekend. Take some time, unplug from the markets. Don't worry about the news. Refresh your brain, get outside, and come back, recharge next week. I will do a little bit of an extended recharge with some family vacation time next week. So if we get any updates at all, they will be brief and sporadic. But you guys have a great week, and I will be back with you again very soon.